Hi guys, it's Glenda Warren, and I'm here today because, hey, I wanted to drop in and talk life insurance. It is Life Insurance Awareness Month, so it's a perfect time for us to discuss or become a little bit more aware or educated about the different types of life insurance that are available. So, if you'll take some time, I want you to click like and share so that other people can be enlightened as well. All right, are you ready to get into it? Great, let's get into it. Here behind me on my board, what I've done is separated the two types into term and permanent life insurance. And we're going to talk about some of the different features because there are some very distinct features between the two. Okay? Term life insurance, of course, is just that. It's for a term or a period of time. So if we look at the duration, what we're looking at for a term life insurance policy is between 10 to 30 years. That's how long that policy will last. So you can get either a 10-year policy, a 20-year policy, a 25-year policy, or a 30-year policy. So when that term expires, and it will expire, then there's nothing left. The policy is gone. You'll have to go out and get another policy. With a permanent policy, it's going to last for a lifetime as long as you pay your premiums. Okay? So it doesn't expire as long as you pay your premiums. All right? Now, when you look at the cost differences between the two, a term policy is going to be cheaper than a permanent policy. The reason for that is because of that duration. Because you have a shorter duration with a term policy, then it becomes less of a risk for an insurance company. The chances of you outliving a 10-year term or a 20-year term is pretty good. So therefore, the companies don't consider that as high of a risk as having to cover you for your entire life. So for that reason, you'll see the difference in premiums is pretty much a big difference. Okay? And I won't call it a really, really big difference because your policy premium is going to be tied to a number of variables anyway. Whether or not you are younger or older, the older you get, the higher your premium. The more health conditions you have, and especially if they're high risk conditions, the higher your premiums. So there are a lot of other things that play into whether or not you have a high or low premium. Okay? But in general, a permanent premium is going to be higher than a term premium. So some people choose to get term life insurance for that reason because they want to pay less for life insurance. But if you can afford a little bit higher of a premium, get a permanent one. Your death benefit. Both of these policies will guarantee a death benefit if you die. The term policy, if you die within that term, whether it's a 10-year, 20, or 30-year term, you're going to get the amount of that face value. So if it's a $100,000 policy and you die within that time frame, if this is a level term policy, you will get that $100,000, or your family, your beneficiary that you name in your policy, will receive that full amount tax-free. All right? A permanent policy, same thing. $100,000 policy, that death benefit is guaranteed. If you should die anytime during your life, they're going to receive that $100,000 face value, if that's the face value you purchased for your policy. Okay? Cash value. A term policy has no cash value, whereas a permanent policy is going to build cash value. There are different types of permanent policies, and they'll build cash value according to that type and the amount of interest that that type of policy will pay. For example, if it's a guaranteed universal life policy, it'll pay a smaller percentage than if it's an indexed universal life policy, which has a higher rate of return. Okay? But as that policy builds in value, you can actually at any time during that term, this is not a term, it's a permanent policy. As this policy builds cash value, you can actually take what's called a policy loan and take up to 90% of the cash value of this policy out at any time, or actually you're going to take as much as has accumulated. You can take whatever's out of this policy tax-free and use it for whatever it is that you want to use it for. Okay? That's another benefit to having a permanent policy. You can actually take money out of it. It's building cash value over time. This is something you can use while you're still alive. Okay? Now, there is an exception here on the term policy. It's not a cash value that's going to build up with interest, but there's a new type of term policy called a return of premium, which will allow you to get all of the premium payments that you pay into it back when that policy matures and you have to cash out. Okay? Now, on a regular term, you don't receive anything when that term ends. But on a return of premium, you'll receive all of the premium payments you paid in back. Okay? That's a benefit. It's like having a savings account. Okay? But this is going to be a little bit higher in premium than, it's actually going to be a little bit closer to what you would pay for a permanent policy. But again, the difference is you're going to get something back out of this term policy instead of nothing. Okay? Now, last thing we want to look at is how your premiums are structured. You can do level premiums on a term policy so that you're paying the same amount every month. So if it's a $20 a month term policy, then you're going to pay $20 for the period of that term. It's a 20-year term, then for 20 years, you're going to pay $20 a month. With the permanent policy, you can either have it set up to be a level premium payment, or it could change over time depending on how you want the money to accumulate within that policy. Okay? So these are all the differences between term and permanent policies. Now, there are a lot of different types of term and permanent policies, and we'll get into those in another video because I want to be able to break down to you those different types. We'll talk a little bit more about return of premium as a term policy. We'll talk a little bit more about the difference in the years. There's an annual renewable term. There's so many other things that we can actually discuss about the type of policies that are available on either category. Okay? But what I wanted to do today is just kind of touch on the difference, the major differences between a term policy and a permanent policy. And if you don't remember anything else, remember this: term expires, permanent lasts a lifetime. Okay? As long as you pay your premiums. All right? So make sure that you like, share, and even post a comment below because I want to know what you're thinking. Ask me any questions that you may have so that I'll know what I can address specifically for you. It is Life Insurance Awareness Month, and as I always say, you only have one life to live. Make sure you insure it. Have a good one.